Hey everyone, welcome back to Corporate Decoder, the place where we decode corporate filings. Today we're diving into Inogen's proxy statement. It's a bit like reading your neighbour's mail if your neighbour was a publicly traded company. We'll see who they want on the board, how much they're paying their executives, and if they're asking for more stock to hand out. It's all public record and it can be quite interesting. This year there's a bit of drama. A key vote saw significantly lowered support than years previous, so we will see what is going on there. First, the basics. This is a Schedule 14A, also known as a proxy statement, meaning that the company is asking its shareholders to vote on important decisions at the annual meeting happening in May. One of the main things shareholders get to vote on is who sits on the board of directors. This year, they need to elect 3 Class 2 directors. That's just a fancy way of saying some board members' terms are up, and shareholders need to decide if they want them to stay or vote in someone new. Another important thing is the auditor. The shareholders need to confirm that they approve of the company's choice for their accounting firm. It's kind of like double checking the company's math. This year it's Deloitte and Touche. Then there's the say on pay vote. Shareholders get to give their opinion on how much the top executives are getting paid. It's non-binding, so the board doesn't have to listen, but it's a good way for investors to voice their approval or disapproval. Finally, Inogen wants to get approval for their stock incentive plan. This is basically a pool of company stock set aside to reward employees and executives. Shareholders get to vote on whether or not to allow the company to create more of these incentives. The board is urging shareholders to vote for all their recommendations, including the election of their director picks, ratifying the auditor, approving executive pay, and approving the stock incentive plan. Of course, shareholders are free to vote as they choose. Now, the report gets into the inner workings of the board itself. It turns out that during the past year, the board held 7 meetings. Each director attended at least 75% of the meetings they were expected to be at. They also have committees like the Audit Committee, Compensation Committee, and Nominating and Governance Committee. These committees help the board focus on specific areas. Speaking of the board, most of them are considered independent, meaning that they don't have close ties to the company's management. This is meant to ensure that the board is acting in the best interests of the shareholders, not just management. 6 out of 7 directors are independent. There are no executive officers on our board. This helps keep everything fair and transparent, making sure no one is voting to give themselves an unfair advantage. So how does Inogen decide who gets to be on the board? There is a process with minimum qualifications and evaluating factors. The committee looks at things like character, integrity, experience, and if they think the candidate can make significant contributions. Okay, here's the interesting bit. Apparently, last year, support for one of the board nominees wasn't as strong as usual. There was a big vote against one of the directors' election, and 48% of the votes cast were in favour of her election. Because of this lack of support, the company talked with stockholders to figure out the problem. The concern was that the director was on too many boards, overboarding. The director resigned from 2 public companies in response. What about the director's pay? Non-employee directors get cash and stock awards. The chairperson of the board gets the most, followed by the head of the audit committee, and then the compensation committee. In terms of total compensation, most of the non-employee directors made about $240,000, $313,000. The audit committee is responsible for checking that the company's financial statements are accurate. They have reviewed them, as well as the accounting practices with both the management and Deloitte and Touche. They are happy with what they found, recommending them to be included in the 10K report. It's also revealed how much Inogen is paying its auditor. In 2024, Deloitte made $1.7 million in total and $1.7 million the year before. Let's see who the top executives are. There is Kevin Smith, who is CEO and President, Michael Bourque is CFO, and so on. Now, the main event, how much is everyone making? This section explains how they design executive compensation to attract, motivate, reward, and retain their top people, that we will skip some details for brevity. As for big movements, Inogen appointed a new Executive Vice President, Chief Commercial Officer in January, a new CFO in March, and a new Executive Vice President, General Counsel, Secretary, and Business Development in July. There was definitely a transition. Let's look at how the company is doing. Inogen reported revenue of $335.7 million, up 6.4% from 2023. The gross margin also rose. The top executives had an annual bonus plan payout at 200% of target payout levels, meaning they were hitting it out of the park. Alright, it's time to look at some numbers directly. Here's the table showing us the compensation for the named executive officers, or NEOs. Kevin R.M. Smith, CEO, is reported with over $4.1 million in total compensation in 2024. He received $705K in salary and $141 million for a bonus. The company has the right amount of securities to be issued, but for long-term stability, perhaps they should allocate slightly more equity. Now, who owns the company? It goes over here, the names of people who owns at least 5% of the company, and if there is something else with these people's shares, or they have the voting rights. And how can you as a shareholder get involved? If you want to submit a proposal for the next annual meeting, you have to get it in by November 27th of 2025 to Inogen's main address. So what's the story here? From the report, Inogen seems to be recovering after a rough period. New leaders are being recruited and rewarded. The stock incentive plan they are asking for will likely go through to help retain current top talent. I'm cautiously bullish. The one director that was almost kicked out is still a question mark that needs to be solved. Perhaps it should be considered by the board who is the best pick for the job rather than following seniority, especially as it's a small board. That said, Inogen appears to be taking steps to improve its governance and connect executive pay with performance. There are a lot of people that have a lot riding on the company doing well. Thanks for watching. If you found this helpful, give us a like and subscribe and let us know what company you want us to decode next.